It's happening again. The question is, are you ready for it? I'm going to show you in this video what is happening in the stock market right now and how you could benefit. Stick around. I know you're going to like this one. Hey, welcome back, everyone. It is time for another red hot cover call video. Well, hey, look, we're going to jump right to it. Something's happening in the stock market right now that no one's noticing. Now, of course, I have been watching this for weeks, and I'll tell you what, right now, if you agree with me, is your time to act. Now, look, this is all my opinion. These are my thoughts, but I'll tell you, proof's in the pudding. And right now, we're seeing a reversal in the stock market. To be honest with you, most people aren't watching because they're watching the news of the terrible news that's happening overseas. I want to show you today a chart pattern for which we need to start watching because it just happened recently. Let's go ahead and get to this. If you like anything you hear and what you're about to hear, I want you to subscribe to the channel. And look, if you like the video, man, bang the like button. It lets me know you like what I'm doing, jacks me up to come back to look at the video performance and see that you hit the like button. Really makes my day. We're talking about head and shoulders. You hear this on YouTube. You hear people talking about the head and shoulders chart pattern for a stock. Now, we're going to talk about the S&P 500. I'm also going to show you a trade for which I use this information. You have to understand, I do not turn my head away when the markets are falling some 900 points 2 days ago. It rallies to plus 70, and then yesterday, it rallies almost another 900 points. I don't turn my head away because I'm looking for opportunities. All right, those are magical moments where volatility allows us to make serious premium when we use the cash secure put. Now, I know for a lot of you, you just can't stomach it, and I understand, but these are beautiful moments. I mean, just recently I sent to the members a Merck trade for which we talked about the poor man's covered call and how you can get in. The time value on the leaps was damn near nothing. I was able to leverage about $5,700. I remember Merck's trading for around $75, $76. I was able to leverage about $5,700 and I bought 2 leaps and I sold 2 30-day covered calls. Now, these 30-day covered calls are not deep out of the money. Because the time value was so small, I was able to write a near-the-money covered call, and it's going to be profitable. I'll tell you what, this is what I do. Okay, if you haven't figured that out, this is my passion, and I want to share this with you. So look, let's go ahead and get to this. We're going to talk about the head and shoulders pattern because it happened, and it's happening now. Let's go ahead and look at the S&P 500. We'll talk about this. I'll show you a trade I did based on this. Now, I'm not going to profess to be some chart expert, but I have been watching a lot of videos, learning, just absorbing all the information like a sponge. See, when the bills don't stop, John doesn't stop. I'm always looking to up my game and up the game of my members. Hey, look, we got to stay in the game because we got to pay some bills. Now, I want you to notice, back in August, the S&P 500 established what was a head and shoulders pattern. And with the head and shoulders pattern on the right shoulder, this is typically called the right shoulder, and we have a neckline. Now, the way this works is this. If the neckline is established as support, there's a chance that it's going to bounce higher. And that's exactly what the S&P 500 did the last time it developed a head and shoulders trading pattern. Now, a head and shoulders trading pattern can go the other way, where it breaks the neckline, and of course, we get a downtrend, and now all of those support lines are wiped out, and it's looking for the next possible support line. Okay, so the head and shoulders pattern doesn't give us really a bullish or bearish at any one moment. The head and shoulders pattern is developed after 2 other moves in the stock. So it's a lagging indicator. As you could see, we don't know that it's a head and shoulders right here. We don't know that it's a head and shoulders right here. But once it tops and heads past the last high, the left shoulder, we developed the head and shoulders. So now the question is it going to hold the neckline? If it holds the neckline, then that is a catalyst to move the stock higher. If it does not hold the neckline, then the stock could definitely see more selling and it'll look for another support line lower. Well, the S&P 500 back then actually hit that neckline and rallied to all-time highs. But now I want to show you where we're at today and what has recently happened. So here we are. This is current day. We have a head and shoulders right now with the S&P 500. Now, here's the deal. We have to have conviction. The conviction is it has to find that neckline and bounce off of it. So some chart experts will say, look, man, this is not a head and shoulders, but we're damn near close to it. But what I'm seeing is this, and this is what I really want you to take away from this video, okay? We're getting tremendous selling from the top down to where we are today. The Dow is off 11%. That's correction mode. The NASDAQ is off 18%. This is flat out bear territory, or some people would say crash for the NASDAQ. I'm using the S&P 500 as a chart, but most people will say when the Dow falls 10%, we're in full-blown correction mode. Well, here we are. 2 days ago, the Dow got rocked some 900 points. And by the end of the day, it rallied plus 70. Let's take a look at that chart. So this is the 5-day chart on the Dow. You could see that it had been selling off. As we were getting into the conflict overseas, the night it was announced they were invading, well, the Dow opens up down some 850 points. And I think intraday it was down some 900 points. Now, throughout the day, the Dow was bouncing. And as you can see, we get heavy selling. Wall Street's just selling because there's no certainty. They don't know if China is going to announce that they're going to simultaneously invade Taiwan. Uncertainty will cause Wall Street to sell off. So you got to sit there, right? You got to sit on your hands and brace for the moment. With that said, if you have fresh cash, you believe this is just a short-term moment, well, you can use a cash secure put and absolutely benefit. Now, here's the deal. The Dow actually rallies, and it rallies some 70 points on the day of the invasion. We wake up yesterday and the Dow has spiked all the way to some 800 plus points. Now, most people don't understand that. They don't understand how the hell can you invade, be down 900 points. A day later, it's up 900 points. That's a 1,700 point reversal, and hell is breaking loose. Well, if you step back and you say, you know, the Dow is down 11%. And I guess Jay Powell came out and said, hey, he's going to hold off raising interest rates. And at this exact moment, there's companies announcing earnings, and they're not that bad. Stocks are absolutely rocketing higher. Hell, Square was up some 22% yesterday. So what you're getting now is possibly a FOMO for Wall Street to not be a part of this rally. And this is why the head and shoulders trading pattern is one to be watching. When we get that reversal and that pop higher, there's a couple things working here. Dow could be doing a reversal from a correction. It's down 11%. With all that said, that's pie in the sky. We can wake up on Monday morning and this thing reverses back and it breaks the neckline and it continues to move lower, probably looking for the next line of support. So there could be more selling. But for me, I'm a half cup full guy. I want to use these opportunities as money-making opportunities. So let me show you what I did to benefit from this move. And really what I want you to take away from this video is this. When you're half cup full and you look for opportunities, you'll find them in this market. Right when the VIX is jacked up, premiums are much more juicier. I tell you what, these are opportunities. Do not be like most people that turn off the stock market. So many people email me saying, look, man, I just can't look anymore. What I need you to do is have that half cup full mentality, because people who have the half cup full mentality will have opportunities to take advantage of these moments, right? So that's really what I want you to take away from this video. Now, let me show you exactly what I did to benefit from this. Well, of course, I used UDOW, which is the 3X leveraged ETF to the Dow. My take since 2020 is let's not take big stakes in big companies because they can F us. Look at PayPal and Square recently for me, Zillow last year. What I'd rather do is use an index. Use an index for which it's diversified, because if I believe the markets are going to come back, I'm just going to use some leverage to make X amount more when we hopefully rally. Well, I believe we're hopefully going to rally. So when UDOW was down to $60 a share and the Dow is down 11% from its all-time highs, full-on correction mode, I went ahead and bought 200 shares of UDOW, paid about $60.85. I decided to then write the 62 covered call. I gave the call buyer a little bit of time here. Okay, I gave him April 14th. I don't mind holding these shares because I believe UDOW is near the bottom. Giving this 2 months, I believe this all works out and it moves higher. I end up getting $5.30 for that. Now, if my shares are taken away at 62, my total profit here is some $1,290 on 200 shares of UDOW. Now, I have no problem holding this paper on UDOW. Why? Because the Dow is already down 11%. Right? I'm not doing this at all-time highs. I'm doing this when the Dow is getting crushed and there's more chance the markets go higher than lower. So I went ahead and told the members this. Look, I went ahead, bought those 200 shares. Yeah, it's a 50-day trade, but to make 10.5% in 50 days, look, I'll take that all day long because that's over 5% for essentially a 2-month trade. And if you could be making 5% a month, you are absolutely killing it. Now, the only way this trade works is my absolute belief that the markets are nearing a reversal at the end of a correction. Let me show you something I sent to the members about Rocket. It's very interesting, and I think you can make some money on it. I know I am. I want to show you that right now. My members are getting all this information. God, I think yesterday I sent out 4 or 5 emails, plus all the trades I'm doing. Okay, I showed you that UDOW trade. You didn't see my Square Poor Man's Covered Call trade or the Merck trade that I did. In fact, let me show you where I'm at in February with regards to my trading. So here's February. I'm probably going to have to add lines to my total income tracker because this month isn't over yet. Yeah, granted, Monday is the end of the month, but the point is, I have some trades that I would like to do. And let me show you January. January, for which I made $6,000, I traded the most ever. Now, the markets are tanking during this time. So if you're someone that turns the stock market off when the markets are tanking, I really need you to change that attitude. If anything, just have an open mind that during these moments, these are opportunities to make some real money. So in this video, very generically, I talked about the head and shoulders trading pattern. It happened in August of last year. And when the S&P 500 did not break the neckline, it moved higher. Now, because we've had war, we've had a recent correction, the current neckline on the S&P 500 has probably been broken. Now, there is an absolute chance that Wall Street takes profit after a 1,700-point reversal in 2 days. So Friday's 800-plus point day on the Dow isn't conviction that it's going to go higher. But I want you to be watching. I want you to go to YouTube and search head and shoulders trading pattern. I want you to search what constitutes a stock market correction. See, I want you to stay in the game because that's the only way we pay the bills, right? I have one motto here. The bills do not stop. John does not stop. My members do not become members to hear some mopey, half cup empty stock market trader. So I always try to find the half cup full open mindset trying to generate money, trying to generate profits and cash, right? I got to pay the bills this month. Talking about paying the bills, let's go ahead and show you something that's happening with Rocket Mortgage that you can benefit from. You know my love affair with Rocket Mortgage. Got 4,000 shares and I have 10 Leaps contracts. I just love using Rocket for these little monthly crumbs. And with my 4,000 shares, I'm able to write little 30-day, 30 Delta covered calls, pick up about $750 every single time. I love it. I do it every single month. Well, with the 10 Leaps contracts, I'm kind of doing the same thing, although I haven't been as aggressive with the Leaps, but I will now. Rocket announces earnings and they're not that bad. In fact, they beat a lot of their numbers from last quarter and year over year, but it wasn't that exciting for which the stock was up 22%. However, they announced a $1 special dividend. Now, what's important to understand about this dividend is this. If you're the shareholder on the X date, you will collect $1.01 per share in a special dividend, cash dividend. Also, the last time this happened, there was a dividend run-up in the stock that was absolutely unprecedented. And right around that time, Wall Street Bets got involved, popped rocket from what was an under $20 stock to $30. Now, I remember that sucked because I actually had a covered call on my shares, and I was really hoping that I weren't going to have them taken away because that was a hell of a pop. Now, since then, the meme crowd has avoided Rocket, and Rocket is now trading for around $12. So for $1,200 to buy 100 shares, and if you're a shareholder on the X date of this special dividend, you'll be given $100. It's just something to keep on your radar. I'm not recommending Rocket. Okay, this is no stock recommendation. What I want you to, just like in the head and shoulders stock pattern, I want you to keep your eyes on the ball. Do you remember that game in elementary school where you'd be in the gym and they had the big old kickball, right? It's that orange rubber kickball. And you would have teams on both sides of the midline. And they'd throw a ball out and you would try to hit people to knock them out. And I forget the name of that game right now, but here's the deal. That game has very important rule. You have to keep your eye on the ball. If you're there on one side and you're bullshitting with your friend, you're going to get tagged. I want you to keep your eye on the ball right now. As the markets are in correction mode and they could be reversing out, you need to be watching right now. Now look, I send my members emails every single day because I'm always watching. If you want to join, I got a 1 free month offer for you. I got people from around the world as a part of my membership. And they absolutely tell me, look, if anything, your membership is about your energy, your passion, and keeping me updated on great news that helps me get better in the stock market. And I tell you what, that's the true goal. I want everybody to have success. So look, go to my website, cptdashboard.com, click Upgraded Dashboard. 1 free month waiting for you. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.